To me, I don't see why people feel like the market necessarily has to be complex. Now, I think it's not because it isn't complex and there aren't a lot of decisions that go into moving the price.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome back to the Two Traders Podcast. I've got Darren on the line. How are you going today, Darren?
Yeah, I'm really good, Walter.
So we're going to talk about this idea of the markets and how complex they are. I'd love to get your thoughts on this. So we often hear things like, oh, the markets are so complex. People can't understand the markets. They move randomly. You can't make money in the markets. It's a zero-sum game. All these things like that. What are some of your thoughts on that?
I think it's insanely complex, and I think that's probably why trading is so difficult, because I think we try and assert our control on the market, and we try and find patterns to trade profitably, and when they don't work, then we kind of add complexity to them because the market is so complex, and we think if we have a very complex strategy, that's somehow going to give us an edge, whereas really I think simplicity is the answer. I like to think of it as random, and that will causes a lot of grief for people. I don't see simple patterns that we like to trade as ever having a sustained edge, and I think the route to profit is not going to come from those purely on their own.
Right. So let me ask you this. What do you think about people then in terms of behaviors of people? So I'll give you an example. So I like to go to this restaurant, and because my kid, he likes to have Mexican food, all right? So we go into this restaurant, and I have yet to see, walking into this restaurant, I've yet to see a clown doing a strip show on top of one of the tables, right? Because that's just not what people do in the restaurant. We don't have dancing clowns taking off their clothes on top of the table, because there's sort of like an accepted range of behaviors, and I haven't seen much. I mean, I suppose one day someone could come in with a knife and try and take over the restaurant, and another time maybe someone come in and dump off a tub full of Jell-O, or I don't know. I mean, crazy things could happen, but they don't. You know what I mean? They don't happen. So I guess my question for you is, I know you probably know what I'm getting at, but the idea here is the market is made up of people, okay? And why is it that it's so complex that we can't see something going on in the markets? Because after all, the people are the ones who are participating in the market. Now, it may be a computer program that the people created. It still is, by extension, the people. So are people just as random and behave in the same random patterns that you see in the markets? That's my question.
Yeah, that wasn't a particularly great opening for me. I can see where you're driving now. And yes, obviously, markets are people, but there's so many people in the market, and so many people with different objectives and goals from their entries and exits to the market. Then who do you take notice of? Do you take notice of the retail traders, or do you take notice of the institutional trader that's buying currency for Mercedes, or where they want to buy X amount of dollars, X average price over X period of time? All of those different people in the market are going to make it appear more random. I'm not explaining myself particularly well here, but you're right. The market behaves in a human way, and I think if you zoom in and look at a chart of a price chart, it can look very complex, and if you zoom right out, you can see it's essentially just going up and down. So yeah, I mean, can you learn to read that and trade that profitably? Yeah, I'm sure you can.
But okay, but here's another thing. Like, you've basically boiled it down. You've said, look, I'm going to make money when the market goes. I don't care. I just want it to go, right?
Yeah.
True, right? I mean, that's...
Yeah, that's what I do.
So now my question would be, is it Because you're right. I mean, there are a lot of things going on in the markets. There's information that's constantly being released, and that's affecting the traders' decisions who participate, and the institutions, and the big volume and the little volume. All this stuff is happening, and the algos are firing off left, right, and center, and that's true. But in essence, what you've done is you've basically said, look, the market either goes, or it's either excited and it goes, or it's quiet and it sort of rests. And so when it's resting, I'm going to lose money, and when it goes, I'm going to make money, right? And in theory, I should make more money on balance, because when it goes, I'll capture a bigger chunk of that move than the losses that I take when it doesn't really go anywhere and just kind of sits there, right? And so, yeah, is that fair to say?
That's spot on.
Yeah. So this, to me, I don't see why people feel like the market necessarily has to be complex. Now, I think it's not because it isn't complex and there aren't a lot of decisions that go into to moving the price, right? But I guess it's just a matter of perspective, right? Because you've taken this perspective, which is you've really boiled it down to either the market's going or the market's resting, and it's doing. And I want to get in when it's going, and I never know when it's going to be going. It could just be resting now, and I think it's going to be going, and in that case, I have a loser. But it could also be going now, and it looks like it's going, and it does go, and now I have a big fat winner. So I guess my question would be, is it that people are too hung up on the details of the market and trying to predict that or see that or put that into a box that makes it difficult, and why they throw their hands up and say, this is much too complex for me? Whereas if you take the 35,000 foot view and take that step back and look at it like you have, you're basically saying, look, it's either going to go or it's not going to go, and I want to be in when it goes.
You're right. I mean, I started off saying the market is insanely complex, and at the same time I trade it with a view of it being very simple. So you're right. I mean, perspective is important. But I think, people do come with that complex idea that they can somehow, from the information on the screen, realistically and accurately predict what is going to happen next. And they might be right, but they might be wrong by 1 pip, So, maybe price has been falling hard, and then you get a pin bar and it's at a significant level of support and resistance. They're going to go long at the break of the pin bar, and they get taken into the trade, and price just dips down, takes out their stop and goes. That's what I mean by insanely complex is, even if you're kind of reading the feel of the market and you've got a pretty good assumption about what's going to happen next, that sort of minute little bit of complexity in there can mess it all up for you.
Sure, yeah, absolutely. I think it's interesting because when you think about it, I think, as when we first come into it as a trader, I think we feel like we have to understand everything. And then once we crack the code, so to speak, then we're all off to the races, and the profits will start piling up. But I think it's like anything, like the longer you stay with something and learn about something, you talk to the professors of chemistry, and they'll tell you all these things that we don't know about chemistry or astronomy or whatever the discipline. And I think it's kind of the same thing, with trading, where you walk into it thinking, well, I just need to figure this out. And then in the end, you say, well, maybe I don't have to figure it out. Maybe I just need to come up with some sort of really simple, blunt instrument that will work, and maybe it's not that critical. I think back to the days when I started trying to build I built a neural network, which is basically almost like artificial intelligence that's supposed to spit out what the moving average of the dollar yen is going to be 3 days from now. Okay, so that was this huge thing that I had to learn all this stuff, and how do you build it, and what kind of data do you feed it, and we had to feed data into it every day, and it was a real nightmare, right? And I look back at that and I think it wasn't really wasted time trying to understand what was going on and trying to predict what was going on, because in the end, I understand that you don't have to do that. Like, you don't have to predict what the market's going to do to make money, right? I mean, and I know you probably would agree with this. It's our desire to really understand and predict and control that kind of gets in the way, doesn't it?
Yeah, definitely. And I'm always amazed at the people that want to be able to explain and give reasons for every single move in the market. You know, it's going to go here, it's going to close that gap, it's going to return to here, then it's going to bounce up to here, and it's just like, how can you even think that that's a viable way of making money? And I'm not saying that nobody can do that, but to me, to my mind, that's madness.
Yeah, absolutely. Yeah, I can see that. I can see why. Yeah, I mean, in a way, you could argue, Darren, that those people, like you just described, they're more interested in being right than in making money. In a way.
Yeah, and probably they're not aware of that as well. They're not aware that that's what they're doing. They probably come from a background where that's what they're expected to do, maybe in their job or from their parents. I'm guessing that that's kind of the environment that they've been exposed to for a long time. So that is their approach. And I think also a lot of people get drawn into that, because if there's two people and one of them's telling you, it's basically gambling, okay, but you need to take your risk, you need to control your risk, and when you make a decent profit, you need to take it off the table. And then the next person is saying, I can read the market, I know exactly what it's going to do. You know, which person are you going to listen to? You know?
Yeah, exactly.
You're not going to listen to me, are you?
Yeah, exactly. You're the one that, you know, we need to feel like we're in control. I mean, that's. I have to ask you, have you seen that movie called The Big Short?
No, it's on my list. I was going to watch it this evening, actually, but I fell asleep.
All right. I watched it last night, and I think a lot of this it's kind of bubbling up for me, like this idea that you've heard the phrase, you know, the market, it's something like the market can remain wrong longer than you can remain solvent, or something like that. I can't remember exactly what it is, but it reminds me of that. And maybe you'll like when you see the movie, you'll see, but like this idea that you can be spot on about where the market's going to go, but you can lose a lot of money between the time that you actually put the risk capital up and say, okay, this is where I think the market's going to go, and then when it actually goes there. You know what I mean? Like that gap between when you place your bet and put your risk capital up for the market to take or decide what to do with, and then when the market actually goes to where you think it's going to go, I mean, that gap there can just drain you and bleed you. Even though in theory you're right, it's just, you know, how long will it take to get there? That sort of thing. So that's one of the good things about being, you know, if you're a perpetual bull or perpetual bear, the good news is you're going to be right eventually. The question is, are you going to have enough money when you are eventually right? You know what I mean? So
yeah. I went down a few avenues of just being a bull or a bear as well, and that can be made to work. But for me, again, you have that kind of second guessing. Oh, should I be a bull today? No, actually, I think I should have been a bear today. And then, you know, before you know it, you're running around in your head, not knowing whether you're a bull or a bear. And eventually, I got to the point where I just don't have any bias at all. Just get up and start trading, and if price runs my way, excellent. You know, I've got some profit, and now I need to make some decisions on what I do with that profit. That is eventually what's worked for me, and because I couldn't deal with the complexity of it. I thought I could for a long time, and I had some success with it, but I found the tough times very hard to deal with, because, you know, I wasn't questioning the market then, I was questioning on, you know, my decisions about, you know, the entries I took. And for me, you know, making it less complex how I trade, it's worked out well for me.
Right. Yep. Makes perfect sense. Well, Darren, thanks a lot for another great session. Really appreciate it. And we'll see you next time.
Okay, Walter. See you soon.
Bye.